traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Monday, June the 15th. News items for this week as we review. Nothing on the docket for today, but we have some heavy reporting coming up the rest of the week. On Tuesday, we have core retail sales, really important number, retail sales in general. Then we have Jerome Powell, our Fed chair, speaking and testifying in Washington. That's on Tuesday. Wednesday, we continue with building permits and chairman continuing to testify at noon. Followed by Thursday, Philly Fed, unemployment claims, the always important unemployment claims, the CB leading index, and of course, Federal Chairman Powell speaks at 1 p.m. So it's going to be another week dominated by the Fed and potential slowdowns based on two things. Number one, testifications, and number two, obviously, where the market finds itself right now. And let's quickly jump into our analysis here. And as we can see here in our daily chart, market is opening this morning below the 200 SMA. Remember that this is the bellwether indicator in Wall Street. This is what they call the blue light special. Everyone keeps an eye on this one. We like to be above it to consider a bull market, below it a bear market. But remember, we've been talking about no significant retracement since we began this tear that began right around the middle of May. So this practically a month of movement without a significant retracement until we had our significant retracement here on Thursday with the biggest drop we've had in the last 3 months. Recovered quickly on Friday above the 200. Today we're opening below it. Now remember, it's not so much where we open, it's more importantly where we close. Now, can we stay here and do a little bit of churning here within this area here? Yes, it wouldn't be something that would surprise us. If we look historically at any kind of moves that happened on the 200 SMA, you can see how the market, see here's the 200 SMA here, we went below it, we kind of danced around. Let's look at another spot here. Here, 200 SMA, we kind of got below it. Over here, we danced around it a little bit here, we got up here, kind of danced around. See how we went above it, then we went below it, then we went above it, and so on and so forth. So this isn't new behavior when it comes to 200 SMA. This is just areas that are people looking to just go long. So don't panic about it, relax about it. These are good positions to be in, particularly if we just a little deeper to these particular, say for example, the 50 or the 80 SMA. We can still move a little lower and still have an intact move if you do a retracement from this point to the lowest swing low to the highest swing high. You were still in a healthy state. Now, obviously, with everything that's going on in America today, with the protesting and the looting, and then of course people talking about the second wave of the pandemic, so on and so forth, the market is just churning this information slowly. It's trying to evaluate how much impact this is going to be. Now, if the market recovers from here, then this bar here is the statement. Remember, this is all speculation from coronavirus. Here's the reality finally hit. The true numbers started coming and the market started to recover. So I think it's just going to go in waves. We're always going to have these runs and these huge retracements, until we put this far, far, far behind us. Let's look at another time frame here to give us a better perspective. Again, remember that for weeks, for days on end, we've been within this channel. This channel, it kind of started as a one-man channel, eventually became two, and we pretty much oscillated between those two areas. Here's our big drop, and we dropped right above a former resistance area. Now, as support, market retest this, and where do we find ourselves right now? We're in this channel once again. So this is familiar territory for this market. It had been in there for a while. If you see, we kind of spent a lot of time within this market, so we can expect a little bit of similar behavior. Now, obviously, the next level of support, if the market wants to find one, is going to be down here, which means it's going to drop a little lower if it wants to. If it doesn't want to, then we have this looming gap up here. Remember, markets do not like gaps. So if the market can break above this area here, retest the gap, it can pull back and essentially more than likely try to use this as support. So that's kind of our kind of like the one thing we're looking at, simply because we find ourselves with this gap. Normally, On a market like today, and we can look at it here at this analysis chart here that we use that's closer to our trading chart. When we open the day in a market where we're below the intraday low, and this pink is the intraday low of Friday. When we open up below that price level, typically we're expecting more runs to the downside. And that's typically our first expectation. But we also have Mr. Gap up here. Markets do not like to have gaps. Markets tend to fill gaps. Now, can we break above this and eventually come and fill this gap and then move lower? Absolutely, we can do that. But if we do find, we're going to find a lot of support on the way down, and that's where this particular intraday low can come into effect. Now, here's the market within this compression here, literally showing us a little bit of strength to the upside. So obviously, it's finding support there, resistance there, break above there. A break above there can potentially mean market coming back, holding support, and just trying to fill this gap. So that's what we're looking at right now. We're going to stay long above this trend line here. Anything that happens below this trend line here, we're looking short to this next level of support. So stay safe out there. Be careful. Do not rush this market. Have a great session.